Good morning, good afternoon, good day. Welcome to my weekend market recap, 2nd October 2021. I am Sagar Nandi, retired IT professional, swing trading stocks using the Q systems and techniques that I developed. You may contact me using my email ID tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website sagarnandi.com, YouTube videos on the YouTube channel Trading Profitably, and tweets on Twitter handle Sagar Nandi. You are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. I have updated the diagram showing all the Q systems and their underlying platforms. These are the only systems I use in my trading. For technical analysis, charting and scanning, I use Q Elite on TradeStation, that is used only for the USA market. And I also use Q Global Q Finder on Metastock, that can be used, and I do use them for the USA as well as global markets. Then we have the Icon or Zenith based systems for trade analysis using Q Diary, index analysis using Q Index, stock fundamental peer analysis using Q Vital, sector industry rotation analysis using Q Edge, and seasonality analysis using Season and Seasons, these two programs. They all run on 100% real-time data. They all run on global markets, not only USA market but all the global markets, 100% real-time. And then I use Q symbols, that is an utility to convert symbols from TradeStation format to Refinitiv format, that is ticker symbol to Refinitiv RIC symbol. This also works in real time and uses Zenith data to convert the ticker to RIC codes. I will use these systems today, and these are the blocks that I am covering in Q Master class one by one. My plan is to cover each box, including the underlying platforms, in one separate video, detailed video. I have started that master class. I'll continue that. Now, this diagram I updated, and these small things make me happy. I was pretty happy to update this diagram. Almost as happy as making a profitable trade, some of which I'll discuss today also. That was the last slide. Let's look at the market. But before I start with the markets, I want to spend a few minutes on seasonality. Just now, I showed there are two seasonality programs. One is Q Season, that is used to check seasonality of a single stock, and the other is Seasons, plural, that is used to check seasonality of multiple stocks. The way they are designed is this: you use Q seasonality near the end of a month or just in the beginning of the new month, like now, and process all your symbol universe. Here I have all the liquid symbols. Where from did I get it? In Q Vital, if I go to universe tab at the bottom, I have a list of liquid, mid and high price stocks. How did I generate this list? I generated this list using Q Global Scan. For other countries, you may create a list similar to this if you are trading in other countries. Let's focus on the USA market. So I have a list of the stock universe. These are liquid, high and mid price stocks. I omitted the low price stocks because they tend to be speculative. It has 2,168 stocks. I refresh the list maybe once in 3 months or once in a month. It is up to you. You may refresh the list by running the scans on Q Global. Now I transferred these stocks by clicking the cloud, that is the seasonality button, placing cursor anywhere on the column and click the cloud button. That will bring them to Q seasons. All the stock symbols are now in Q seasons. There were few errors because those sticker symbols may not be valid anymore. Once the seasonality is processed, I look at the stocks and find the ones that are bullish seasonality in this month, October, or bearish seasonality in October, and save them back in Q Vital. I have created 2 columns. Now this needs to be done only once in a month because the seasonality is based on historical data and it does not change in the current month. So near the end of September or now in the beginning of October, you could process the seasonality of all the liquid stocks using Q seasons and save the stocks here only once. So this is what I did, and let me show how I did that. I transferred the stocks to Q seasons. Now let's look at their seasonality table. These are the stocks. I used the bullish seasonality buttons or bearish seasonality buttons to look for bullish or bearish stocks. Let me click the green button, bullish seasonality, for the current month. So it has sorted by bullishness of seasonality 100%, and then if I scroll down it will be lower, gradually lower up to I think 70 or 75%. Now you can see some of them doesn't have enough data. Seasonality is useful only if it is calculated based on enough data. So let me click the 10, this number, to only show records stocks that have at least 10 years of history, and this is the list. They have from 90%, I can go down up to 70% seasonality. Now I am going to the symbol column and double clicking on them to sort it by symbols. You may select all the symbols, Control C to copy, go to Vital Universe tab, right click and paste values. 191 symbols. I already got them. And similarly, if I go back to seasons, now I am going to click the red button that has all the stocks with bearish seasonality down most of the time. Again, many stocks don't have enough data, so I'm clicking the 10 button to get stocks with at least 10 years of history. Again, sorting by symbol column. Double click again to reverse the sort order, ascending. Select the symbols, go to Vital and paste it there. 47 symbols. So once we save Vital with this universe for the entire month, I don't need to do anything. Every day I may look at these stocks fundamentals scorecard, and if they are bullish fundamentally strong, either value or growth or both, then I may look for trade setup using Sonar or Finder. I will do that, but that is what I wanted to show. These steps I follow only once a month. Once they are done, no point running it every day because seasonality is based on historical data. It will not change every day. So this is done. I wanted to show that because this was the right time, beginning of a month. So let me close that. No need to save anything. Now let's continue with the usual market recap. I will come back to the bullish seasonality stocks there. I had the Q master class yesterday and I mentioned Apple had a bullish seasonality in October. We will review that stock in more detail after the market analysis. Market analysis, let's start with global markets, Australian index, Australian all ordinaries. Interesting, isn't it? I pointed to the bearish headwind right on the week, on the day it displayed. And since then, the backdrop color has remained weak. On this week, I mentioned that if in the daily price went up and displayed a bearish flow candle, we will be okay to short the index in spite of the trendline support being nearby, because the probability was higher that it would hit the lower boundary before trying to stop us out. And exactly that happened. It hit the lower boundary, so the short trade that I could anticipate, you could anticipate if you used Q systems, you could take the short trade and exit it at the lower boundary. Then next day, Thursday, it tried to go up, but Friday it fell again. In the weekly, now it has decisively closed below the trend line support. Isn't it beautiful once again that we could look at the bearish headwind appearing at the very top, and since then we could start to look for bearish trades, and indeed in the daily chart we had several bearish trades. And if that is true for the index, for sure that was true even more in individual stocks, especially the stocks that were fundamentally weak and in weak industries. That is the essence of Q technique. Anticipate a market move but wait for a trade setup. Once that takes place, without second guessing, take the trade. Take small risk, make sure reward is bigger than the risk taken in each trade, and keep on swing trading stocks. We have excellent record in the forum, in the Twitter, how the trades work out, and once again the Australian index worked out very well. Now AORD, All Ordinaries Australia market, is in clear downtrend with lower high, lower low, but it is near the lower boundary, so I'll not try to short now. If you kept an eye on AORD, then yesterday when it was turning magenta in the daily, you could switch to fine-tune intraday chart and take a short trade, and that would be very profitable short trade intraday, closed with bearish pressure, so it is looking quite bearish in both weekly daily, but little bit late to short at the close of the day. You could short using fine-tune chart intraday in downtrend. What about Japanese market? Topics index. In the previous webinar, I mentioned that it was having very erratic move, and I suggested not taking any trade unless price could break out of this erratically moving with gap up, gap down range. And now we see price has decided which direction to go. It has come down. Is it in a downtrend now? Let's clear the lines again. Yes, it has lower high. That's why we have a trend line resistance, and we have clearly lower low. So we are in a downtrend. And isn't it beautiful, amazing even, that once again here the bearish headwind told us that a down move was likely, not guaranteed. We can never guarantee where the market will go, but we could anticipate that and protect our profit in existing long positions at a minimum. And then if we had shorting setups in individual stocks, we could take that. Is it the time to short now? No. In my way, it has already dropped significantly from the recent high, swing high, so the stop loss would be far away. I would not like to short now. If you are familiar with my trades that I shared in Twitter always before knowing the result, you know I would start to look for shorting when the bearish headwind came, just like I did in the USA market. Now it is in downtrend for short-term trading, but it is too late to short for my liking. I'll not buy now. I'll wait for a lower risk shorting opportunity. Topics in downtrend. The more we study these charts, how to decide entry, and nowadays I am also explaining exits, how I am managing the trades in videos. I used to do that on the forum. I'm starting to do that on the videos. The more you watch that, you will get more and more confidence to apply this technique of buying low, truly buying low and selling high, swing lows. And it isn't difficult if you follow the Q setups. You will see more, at least 10 stocks I will share today also. But let's go through the market. China market, CSI 300. Sideways. It's not moving anywhere. Interesting, isn't it? The global markets are weakening. USA market weakened a bit. In fact, USA market weakened quite a lot compared to India market, for example. But China market is not going anywhere. In spite of all the news about economy being affected because of the blackouts, energy shortage, electricity outages, market is telling us that it is not a time to buy, not a time to short. In a sideways, no change from previous Wednesday pre-market webinar. FTSE market, UK market, FTSE index also sideways, no change from the previous webinar. And India market, Nifty 50, which used to be the strongest of the global markets, is continuing. This week it dropped. Previous week it made a new all-time high. This week it dropped but could not even go below previous week's low. Now in the past I had mentioned that India and USA market, at least some of the market ETFs in USA used to be highly correlated with India, but that is not true anymore. For now, at least for several weeks, India market is remaining very strong, unlike the USA market. So I am not looking for correlation that I used to do earlier. It is still in an uptrend, still has higher high, higher low in the daily chart, came down little bit from swing high. So if it goes up again, I will look for buy setups in individual stocks. Nifty 50 itself may not give a buy setup because I see the weekly backdrop is magenta, bearish. So even if daily turns cyan, it may not give a go with flow trend following long setup. However, if Nifty 50 goes up, almost certainly we'll get buy setups in individual stocks, continuing to be in an uptrend. That was a look at the global markets. We see no change in India, China and UK markets, same as in Wednesday's webinar. And Japan and Australia market weakened. Both of them are in a downtrend. Australia was already in a downtrend. It dropped further. And Japan also turned into a downtrending market. What about the USA market? Let's look at the market ETFs. In Wednesday's webinar, I mentioned that it was too late for me to short. That was on this day, Wednesday pre-market, so Tuesday market close. Too late to short. After that, market dropped, but on Friday price recovered. So if you shorted based on Tuesday's close, you actually have a losing trade, almost for sure losing trade by Friday's close. So that analysis that market was not at the right point to short that I discussed in Wednesday's webinar, that came true. Why it was oversold? Because it was below lower boundary, that is a signal that it was oversold. It was also below weekly expected move, that was a sign that it was oversold. Also there were signs of oversoldness both in bucket analysis as well as Q finder technical breadths. And if you notice my forum posts, Twitter posts, you would know that from this day onwards, I actually started to look for buy setups and I shared some buying candidates. Overall, those trades worked quite well. That is my style, as I mentioned when discussing the Australian index also. If you look back, I was shorting at the top of SPY in individual stocks. I shorted here. Then I bought near the previous swing low. They worked quite well. In the, I think the last two webinars I discussed, almost all the buys I made at swing low, I exited with profit. And then once again, when the market became oversold, I started buying and sharing at least some of those ideas. I'll review the stocks that I discussed in Twitter, etc. Before knowing the result. I'll show you how they are working. Not every trade is in profit, but overall they are working well. Now I see that daily has a bullish headwind. However, the candle shape is indecisive and there is a trend line resistance not far away, and the weekly backdrop color is bearish. So it has a headwind, but it doesn't have any headwind long setup. So in fact, what I did yesterday on Friday, I took a long trade in SPY using fine-tuned chart at the very bottom. Then I was keeping an eye on it. If I had a breakout of the trendline resistance, I would hold on to the SPY bullish trade. But it didn't, so I exited the trade at the high, almost at the high, not after the pullback, almost at the high with more than 20% of max profit. It was a short put vertical trade. Let me explain the trade. Let's go to the intraday fine-tune chart. When price came down first and then started to go up, I was looking for a buying opportunity because in my view the market was oversold, and I kept an eye not only on SPY but I kept an eye on the market breadth. Okay, why don't I open market breadth? Give me a minute. I was looking at the market internals for four major indices: Russell 2000, Dow Jones Industrials, Russell 2000, Dow Jones Industrials, Nasdaq 100 and S&P 500. Now Russell 2000 was the strongest. I did take a long trade in IWM also, but I exited it prematurely, maybe here. That's fine. I took a trade in SPY also, that was using short put vertical. The IWM trade I took with long call. And as you know, I don't like to take naked calls. So when it stagnated in this region, I didn't want the profit to erode by price drop. I exited. But in SPY, I had short put vertical. So I was able to hold it through this move, this sideways move. Then when it went to the yellow line, a special line that is drawn on intraday charts that may signal a reversal point. These yellow lines are actually calculated from long past history, maybe long past history, maybe recent past history. These are the levels where price reversed earlier, not today but in the past. So when it came there, stopped and displayed a bearish headwind, right on this candle I booked my profit with more than 20% of max profit, maybe 20-25% max max profit for the short put vertical. Now short put, how did I structure it? I sold 430 put. I don't remember how much credit I got, but I went down enough to get half of that credit for the debit. So sold 430, I bought back a lower strike that was half the price of 430 strike for put. So that was my short put vertical, and because the short leg went out of the money. As it went up, I had profit expansion quite rapidly, and I exited at the perfect time. I kept an eye on the daily chart. Let's look at the daily chart again. It was not looking like it was going to break above the trend line resistance, so I didn't want to hold on to the trade. I exited the trade. That was an intraday trade using fine-tuned chart. I used the oversold nature of SPY to anticipate a move up. I used the fine-tuned chart to precisely enter it, and after I entered, I did see that the bullish headwind also came in the daily. So I held on to it till the last moment when intraday chart gave a bearish headwind, and I exited at that point. Now it is remaining in a downtrend. Weekly is also bearish color but indecisive shape. Near the lower boundary, it can go either way. I will keep an eye on it if it comes to the trend line resistance and reverses, or even better, it goes up little bit above trend line resistance and reverses, then I will like to short again. I see some news media, they told, wow, what a great bullish move on Friday. It's not a great bullish move. It seems to be a recovery from oversold condition. Nothing bullish about the weekly daily candles right now. But I did buy some stocks when it was oversold, fundamentally strong stocks. I'll share some of them. SPY right now, I'll not like to buy, I'll not like to short. QQQ, QQQ came precisely to the trend line support on Friday, displayed an indecision at the bottom, a bull release signal, and went up. And this trend line support was there in daily and weekly beforehand. That was one reason I was looking for bullish trades in the market ETFs, and I did trade SPY and IWM. I didn't take a long trade in QQQ. Why I didn't trade QQQ? Because the mega caps were weak in recent days. QQQ is heavily influenced, more influenced, you may say, by mega caps than SPY and Russell 2000, because those are much broader indices. That's why I didn't want to buy QQQ, but I knew, or I anticipated, that if QQQ recovers from trendline support, SPY IWM would also do that, and exactly that happened. This was also a factor in deciding the intraday trades, long trades yesterday. I would rather look for buy setups in QQQ or constituent stocks now. SPY had a trendline resistance nearby, but QQQ has no trendline resistance. It's below the lower boundary. It was oversold. It was weaker than other market ETFs, and it has nice support in both weekly, daily, no resistance nearby. Next resistance is actually the watermark resistance far away. So I will like to look for buy setups in tech stocks or QQQ constituents. Also, if you looked at the thrust, we have two indicators, jump and thrust. The thrust indicator for QQQ showed the extreme low, very oversold level on Thursday. That also told us that Thursday was this day. On Friday, if it came to trendline support, it was very likely that price would bounce at least to give us a profitable day trade. QQQ also could be traded for a profitable day trade, and the thrust signal helped us to identify the oversold condition. The more you study the charts and how they react at oversold points using different indicators, the more confidence you will get to precisely time the trades. Let's look at dia now. Similar to SPY. Recovered on Friday, but indecisive shape candle, weekly candle also indecisive. So I would rather buy QQQ if I had to buy one of the market ETFs at close of Friday. But let's look at IWM to see if IWM is the right choice. No, IWM isn't. In the previous webinar, that was close of Tuesday, this day, I mentioned that I would not trade IWM using daily chart because it was right in the middle of the sideways range. That was very accurate, and looking back, that analysis was very accurate because on Friday price exactly went back to the same price level. So at close of Friday, I will not like to buy IWM, I will not like to short IWM. It's again in the no trading zone. As of Friday's close, if I had to buy any of the market ETFs, I would rather buy QQQ. But I didn't. I instead bought some fundamentally strong stocks at oversold state when market was oversold. I'll come back to that. What is the conclusion from the market ETFs? Tech stocks, QQQ constituents, I don't mind looking for buy setups. Other market ETFs are indecisive. However, like I mentioned in the recent webinars, there are plenty of fundamentally strong stocks at low buy points, excellent buy points in fact, and those are the right candidates to buy. Just looking at the market ETFs is not enough. It may hide the strength of individual industries, strength of individual stocks. So we always look for alignment of industry strength, fundamental strength, technical buy point, and use that to buy at low market level, just like I did last couple of days. I'll share some of the stocks. Market level, no clear direction preference, but let's look at the internals now using global market breadth. First look at the composite indices, very broad internal analysis using Nasdaq as a whole, NYSE as a whole. First we look at the percentage of stocks above 50 MA, went up little bit in both Nasdaq NYSE, but they are in a downtrend, well below the midpoint 50% level, below the average line, the dotted yellow line. So the market internals are continuing to be bearish. Just a little bit up move, and I think Bloomberg or another site had a nice headline that it was a very bullish move on Friday. Nothing like that. We saw that from market ETFs. Q traders tend to believe what they see, not what comes in the media. The market internals is also showing that it is not bullish, continuing to be in a downtrend. Nothing else I will read from this chart. You may study it yourself later. Let's look at the total view. Here also, for the total view, which is calculated using the two exchanges and four major indices, for percentage of stocks above 50 MA is around 32% level in a downtrend, well below the midpoint 50% level, well below the average line, showing that it is weak. If it hits the 20% level and tilts up from there, not just hitting, but if it hits the 20% level or goes below that and then tilts up, that will be a sweet spot to start buying stocks. Again, aligning with industry strength, fundamental strength, I will look out for that. In the past also I did the same, look for oversold condition, and this is using total view, very broad oversold condition. If it comes there, I'll be happy to look for buy setups. 3-month new high low near the lower half, but not at the extreme level, bearish but not oversold yet. In the previous webinar, we were on this day. That time it had a distribution count of 3. Earlier there was a high distribution count of 4. Then on Thursday we had another distribution count of 1. So it is continuing to show more distribution counts, many more now than it was coming in for many. In fact, for the whole screen length, the last 2 weeks have more distribution counts, more bigger distribution counts that for many months. So that is a sign of weakness. What kind of stocks are in favor? Growth versus value. Growth is now tilting down, so value stocks are doing better. Small cap versus large cap. This I shared in the previous webinar also, no change from that webinar. Small caps are doing better. In the previous webinar, growths were also weak. Same status as in the previous webinar. This gives us an idea of what kind of stocks to prefer. We may prefer small cap value stocks to buy now. Avoid large cap growth stocks. That is based on Friday's analysis. The market breadth total view is bearish. It's not oversold, so it's not giving any directional bias. Let's look at technical breadth. Okay, before that, look at the QH sector industry stock, advanced decline breadth, 1 month to 1 day. Just a while ago, 1 and 2 day periods were red. Now it has turned green. It can turn more green than it is today. So we have no preference by looking at this advanced decline breadth. It can go more green, especially the 2 day period, or it can turn red. It can go either way. 1 and 2 day periods are now more bullish than bearish. 5 day period balanced. You may say 5 and 10 day periods are balanced. 1 month period is now bearish. So if now 1 and 2 day periods turn bearish, that will be pointing to a swing high in an overall downtrend. So now it is overall downtrend 1 month period. 1 2 day periods turn bullish. If they turn down, that may be a sweet spot to short stocks. When I looked at different industries, it seems that some industries are gaining strength, some are weakening. So we may be able to buy some stocks and also short some stocks. If I look at the bucket analysis, neither the extreme high nor the extreme low bucket, these two buckets are not at extreme levels of 30% or 40%. So we don't have any directional bias from that, neither overbought nor oversold. And Friday's bucket analysis shows mixed, neutral market. 49% of stocks of S&P 1500 are above the mid Bollinger Band, 51% below the mid Bollinger Band. You may say neutral stance. So Friday was a bullish day that turned the market neutral, not bullish. The neutral posture on Friday's close is clear from the bucket analysis using midline and also the bucket distribution plot. It's neutral. So in a weak market, it became neutral. If it comes down from here, that will be a sweet spot to short stocks. Let's see what is the reading from Finder. Balance between bullish and bearish signals. First the weekly interval. Overall it is balanced. Mixed picture if you look at all the signals. Strength signals bullish but reversals bearish. Reversals and strengths are comparable. So overall we have to say by combining strength and reversal that it is actually bearish. trend continuation, that is neutral. Overall, it is neutral. So we have to say overall the weekly stance is neutral. Earlier it was bearish. So once again we see if the market now turns bearish, that will be a sweet spot to short stocks. Daily interval. Daily interval is very bullish across all categories. All signals, strength signals, trend continuation, reversal signals, they are very bullish. In fact, to the extent of being overbought. Therefore, if the market drops, we'll be able to short sweet spot to short stocks. At the same time, not only in today's webinar, in the previous webinar, Wednesday's pre-market webinar, I mentioned that time also there were number of bullish trades, and between that webinar and Friday's close, I did take some bullish trades. Some industries are showing strength. We could buy in those, and we may be able to short as well. How am I trading? When the market is oversold, I am buying, and then when the market recovers, if the market ETFs give short setup, maybe go through short setup, then I will probably book profit or apply trailing stop in my long trades and then look for shorts. The Finder daily and weekly pictures are now telling that it may be okay to go for buy setups or short setups. Now I mentioned I traded some stocks recently, and let's look at some of them, and you will see how beautifully the Q analysis helped me to pinpoint the entry and exit points. Let's start with Comcast. As I review the entry and exits, you will realize how precisely I am able to enter and exit trades. I shared the short idea on this day. You know that I have shared the trade before knowing the result. I took the trade with short call vertical. When price was coming down here this couple of days, in fact, the market was recovering. So my short call vertical was working well, and I kept an eye on the trend line support, which is coming from far, far away. They worked, I may say, unbelievably well. And I mentioned many times, when you have a short trade, I have a short trade taken well before price comes to the trend line support and it then approaches the trend line support, there is absolutely no reason not to book full profit, not partial but full profit. So when it came to the trend line support weekly and daily, the profit could be booked, and I booked the profit, and immediately next day it displayed a bullish headwind reversal signal, displayed a bull release, and price recovered. If you are trading options, much of the profit would erode if you didn't book profit. But we would book profit because firstly, lot of distance was covered, downside distance after taking the short trade, and it hit a trend line support. That's our exit point. Because it hit both weekly and daily trend line support, we would exit full position, not partial position. And if you know my style, I didn't in this case take a long trade, but you could use the bullish headwind and the trend line support to take a long trade, probably using short put vertical and get at least, I think, 30%, 40, 50% profit by Friday. Why I say 30, 40, 50? Because in SPY on Friday itself I could hit 20 to 25% of max profit, and this was a much bigger move from the trend line support. I didn't take the long trade, but I did take the short trade, shared it at that time, and I booked profit nicely. Therefore, remember, if you are taking a short trade, well, before price is coming to trend line support, when it comes to the trend line support in daily, always book some profit. If it is coming to both weekly and daily trendline support, you may book full position profit. All these are for short-term trading. Let's look at another trade that I shared and how beautifully the trend line helped to make the decision again. That was in CEIX. My system is becoming a little bit slow with registration. Let me close some workspaces. Let's look at CEIX. I shared a possible bearish trade on this day intraday. The idea was shared in my forum and I mentioned that if price cannot close below the trendline support, then the trade setup would not be confirmed. That was a very accurate analysis. In fact, if you were tracking the stock using fine-tuned chart, right at the trendline support, you would notice on fine-tune it reversed, didn't confirm the trade setup next day, and following that guideline would be extremely beneficial because after that it sharply went up. Fundamentally, it was not weak. The industry was showing weakness intraday on this day. However, the guideline of not to short a stock just above trendline support was very useful, meaning very profitable in this case once again. Another stock that I was looking for a short setup but that didn't confirm was in Dell. Again, fundamentally not weak, but there was weakness in the industry. On this day, intraday, I shared a forum post. It was at that time, intraday, it was looking like it was reversing from the daily as well as weekly watermark resistance with a bear release signal. Once again, in the forum post, I mentioned that look for the confirmation at the close of the day. However, it closed with an indecisive shape candle with a lower tail, long lower tail. So the checklist conditions for Q box double top short setup was not confirmed and one would not take the trade. That would be useful, that is profitable because price recovered from there. You may keep an eye on this stock. If it reverses now, then it will create a false upside breakout in the weekly watermark, and if price is not too close to the daily trend line support, you may look for a short setup. But unfortunately, even if it price reverses from this watermark, it will be too close to the trend line support to take a short trade unless we see it is breaking down below the trend line support. That's how and you can combine all the Q signals to decide when we have a low risk entry, when we don't. CEIX and Dell did not give us the setup that we wanted. Then I shared a number of possible long trades. All these are from the forum post, and for the forum posts you may go to my website sagannandi.com. I share my ideas under this category, Q 360 degrees trading techniques and ideas. This was the post on Dell, this was the post on CEIX, and this was the post on 3 large pharma stocks. You may go through them. Let's discuss the 3 pharma stocks. In fact, I bought all of them and overall I made a nice profit. Not in every trade, but overall I made a quite good profit in the trades. Pfizer first. I shared the analysis on this day. Okay, in this case, it is useful to look at the charts, the snapshots. Let's see when I shared it 3 days ago, 29 September, 3:18 p.m. all my times are in Eastern time zone. The pharma industry, after long period of weakness, on that day it was very strong with acceleration. So industry was telling me to look for buy setups, and I found these three large pharma stocks, all undervalued stocks, all were up on the day. And then I looked at their technical charts. This is MRK, had a very beautiful breakout setup after finding support at the memory trendline support. So trendline support and trendline breakout, very nice setup, breakout with bullish pressure, also coming out of a squeeze. So coming out of a squeeze with bullish pressure, very bullish shape. MRK. Pfizer, it gave a bullish headwind signal earlier and then another bullish headwind signal. Also a bull release signal. Now, if you wanted to take only one of Pfizer and MRK, which one would you take? The Q guideline is to take the stronger one. Which one is stronger? The breakout is always stronger than a headwind reversal. Headwind reversal means it is still in a downtrend, and breakout means the downtrend is not there anymore. So it would be the right decision to choose MRK, not Pfizer, if you wanted to buy only one. And notice once again how the bearish headwind could catch the very top. These are low risk entry points. So I decided to, in my own account, I bought Pfizer also. If I wanted to buy only one, I would choose Mark, but I was okay to buy multiple. I bought Pfizer also. That was a possible headwind long setup. And BMY, it was a box long setup reversing from watermark support with bull release and bullish pressure. So in fact, I took long position in all of them, and the charts were looking pretty nice as of the time I shared it. Now let's see how the three trades worked together. Pfizer, the entry was on this day, bullish headwind, and the stop would be below the recent low using Q protection signal. So if you traded with stocks, then you would get stopped out on Friday, and that is why when I am trading bullish headwind trades, and I mentioned it earlier, my preferred instrument is to use vertical so that I don't get stopped out easily. In general, for any reversal setup like headwind or box, you may prefer options verticals, either using puts or calls, so that you don't get stopped out easily. The stocks will have a tendency to stop you out and go up again. So if you traded with options verticals, you are still in the trade. In fact, it closed with a bullish shape candle in daily and with an indecision, which is bullish indecision at the bottom. But if you traded it with a stock, you would get stopped out. So once again, if I am taking a reversal trade, specifically a headwind reversal trade, I like to trade with verticals, not with stocks. And let's look at the stop level. The entry was on this day, so the stop would be using the protection signal at this level if you use stocks, and that would get stopped out using a GTC order. That's fine. That was one trade. That's why we have stop loss. Sometimes we accept losses, but small losses. Now BMY, that was a bullish trade using box setup, using a reversal from this watermark support, and I noticed there was a bullish headwind nearby at that time. The day closed with an upper tail. So if you waited for the close of the day, you don't take the trade. That's the Q guideline. You would look for the entry next day, and next day price came down, so you wouldn't enter the trade. But I am in an opposite time zone, so I did enter the trade. And here also, you see, if you traded it with stocks, you'd get stopped out. However, Friday closed with indecisive shape candle, has upper lower tails both, lower tail longer than upper tail, but it closed with a bullish headwind, and the watermark support held. That is once again showing the reason why I prefer to trade with options verticals if I take reversal trades. If you look at the stop level, the entry would be at this point, maybe at the close of the day, and on that day the stop would be using one of these two levels. Whichever you use, the thick dots or the thin dots, you would get stopped out by Friday. But if you used options verticals, option vertical, why I prefer them, they are also defined risk. And if you are putting a stop loss on stock, you can calculate the dollar value at risk. You are able to put a vertical trade with exactly the same or around the same risk amount. But the advantage is you will not get stopped out. So if you traded stocks, you got stopped out in both of them. If you traded with options verticals, that's my preference. You are still in the trades. Friday's candle, weekly candles are looking good for continuing to hold on. Now, on the other hand, Mark, which was in fact the strongest of the three trades. Why? Because it was not a reversal setup, it was a breakout setup. That gave a lot more profit than the loss taken in both the trades. Even if you got stopped out in both the trades, you had a much bigger profit than the combined loss from Mark. Now, in reality, how I traded it, I prefer for short-term trading at reversal setups, lower price points, verticals. But in this case, I was okay to hold these stocks longer term if I needed to. So I in fact traded all of them with synthetics, that is short the put, buy the call, and booked I booked full position in BMY and PFE already. Might have taken a small loss, and I have also booked enough profit in Mark, this stock, to make up for the loss and have a reasonable profit, sizable profit. And I may be holding partial position. It did close with a bearish looking or indecisive, maybe a little bit more bearish than indecisive shape candle on Friday, reverse from the weekly watermark resistance. So I'll keep an eye on it. The remaining position I'll exit with a nice profit if it goes below Friday's low. Now, if you traded it with verticals, you are still in the other two trades, but I did trade with synthetics and I didn't want to hold on to the losing trades when it was going down on Friday. But overall, I made a sizable profit from these three stocks, all shared before knowing the result. Now let me look at some stocks as of Friday's close that you may consider buying. One is General Motors. Let's look at its fundamentals. And I am near 1 hour point, but let me go a little bit beyond 1 hour to discuss a number of stocks to once again explain exactly how using real-time systems you may pinpoint the entries. I described on the other examples how after entry you can manage the trades. Now let's look at General Motors. Great valuation, undervalued stock, fantastic earnings growth, high revenue growth. Year on year, quarterly earnings growth, revenue growth, sizable, going up. Overall, the industry had more declining stocks than advancing stocks on Friday. However, this is a crown jewel fundamentals, and if you look at the relative score of the industry, it is quite bullish. And if you followed the news on General Motors, there was a news that General Motors is a very famous company, everybody knows it. It's a car manufacturing company, but now they are planning to transition to being a platform company also. So they will not only sell cars, they will sell EV platforms, maybe software hardware combined, but they will sell it to third party car manufacturers also. That to me looked like a possible significant move. They also announced over next couple of years they will introduce about 20 EV models in the USA market. So I thought that was interesting news. So I looked at its fundamentals, very strong crown jewel, industry strong enough to buy, but technically it didn't give a buy setup yet. If Friday's candle was a bullish shape cyan candle, then we would have a go with flow long setup. It would be near upper boundary, that's fine. We are allowed to take a go with flow long setup near upper boundary when it is changing from a downtrend to uptrend. So this should have been the first go with flow long trade after creating higher low, higher high, but that didn't happen. You may keep an eye on General Motors. Again, it's a good idea not to trigger the trade before the signal is confirmed. Just like in Hawaiian Airlines, we could wait and then got a very profitable trade. The same thing we would do in GM. We would wait. We could use real-time chart Monday, Tuesday to see if it is giving a cyan candle in daily and buy. And I noticed the next earnings is in this month. Earnings season is coming again. So we could trade it with verticals. Verticals are okay to trade across earnings, unlike naked call options. So it's perfectly okay to trade verticals. You may choose an expiry after earnings. Long call vertical would probably be more desirable, but I explained in the master class how to choose between long call vertical versus short put vertical. You may carry out that analysis. And if you are doing the analysis during the weekend, you could also use the option chain search on TradeStation. That also I explained in the master class. So I am keeping an eye on General Motors. Not yet a signal, but I will be happy to buy it based on its fundamental strength, and that I thought it was a significant news and industry strength. And USA is opening up. USA, the company Mark actually. Interestingly, if you look at Mark, let me go back to Mark. I remembered about something. See, I shared the trade idea in Mark on this day. And why did this jump happen? Because on Friday there was a news that Mark came out with a pill, a capsule that is for treating COVID-19. But we were already in the trade ahead of the news. And if you tried to buy on the news, probably you are sitting in a losing trade. If you traded the news with options, call options, certainly you are sitting on a big loss because the volatility would crash as price came down. But we could buy the stock before the news came out using Q signals. We booked profit when the news came out. We wouldn't rely on the news anyway. Now in General Motors, why I came back to that, I thought the General Motors news was significant. Industry strong, fundamental strong. So I'm getting ready to buy. I'll buy on Monday if I get a signal. That will be the right time to buy. And sometimes what you may do, what I might have done is buy a small exploratory position on Friday itself, small position. And if I see the signal is confirmed, I'll add to that, make it a full size position. On the other hand, if it goes below the recent low, which will be below this point, then I will take a very small loss because it is an exploratory position. Entering an exploratory position helps you track the stock. And if you are disciplined enough, you may track it otherwise, but it is perfectly okay to enter an exploratory position. And in fact, I did that on Friday. I used options. Now let's look at another stock that is looking better than GM. And I have ordered these stocks in somewhat, you may say, in order of appeal to a buy setup as of Friday's close. This is AU, gold miner. Let's look at its fundamentals. I'm sure, almost sure you will like all these analysis and the stocks. Not undervalued, neither overvalued, not undervalued, medium valued stock with high earnings growth, high revenue growth. seems to have yearly data, not quarterly data, very high earnings growth, a short squeeze potential. And if I look at the industry, okay, industry relatively is weak. If I look at industry percentage, it's also weak. Okay, so industry is weak. Fundamentally, it's telling me it may be a possibility to buy the stock. So I in fact took a position in AU on Friday. I used the technicals and fundamentals, the bullish headwind in weekly, a false downside breakout in weekly, backdrop, color bullish, very bullish shape. In daily, a false downside breakout, bullish flow, Friday bullish shape again, bullish pressure on Thursday, out of squeeze in daily. In alternate charts on Thursday, biggest up move in 3 months. And see how the momentum signals are helping. The biggest up move in 3 months at a low price level. Almost always, not always, but almost always, that points to things that are going to come, points to more bullishness ahead. Biggest up move of 3 months at a low price level. In this case, we have a bullish headwind, false downside reversal. And in daily, it just about broke the trend line resistance weekly, about to break the trend line resistance, very bullish shape and color. Also, if you see, not only thrust like we saw in the another instrument earlier, both jump, thrust and jump is the lower one, jump and thrust hit the extreme low, that is extreme oversold condition, and then it is moving sideways and starting to go up again after a false downside move. Also, we had Mobo breakout and a Kahuna on Thursday. But Thursday I wouldn't buy because it was just below the trend line resistance. Friday it seems to have closed above trend line resistance technically, though not a very decisive breakout. To confirm that, we may look at the stock using Q sonar, and indeed it had a breakout setup, and that's how I found it. AU is one of the stocks that I have in my stock list, stock universe. It gave a long breakout setup on Friday at price extreme low. Now we also have a scan in Q Global, Q Elite both, that looks for stocks reversing at pendulum low, and AU would have come in that also. You see these subtle changes in color in pendulum or price extreme color from magenta to red to dark red. Those are subtle changes at a very low price level. So it would have come in the scan price extreme low and reversing, and then a breakout scan would also find it. And I mentioned in one of the recent webinars, this is a very effective way to buy fundamentally strong stocks at low price point, very different from IBD, which tries to buy at a high breakout point. This is also a breakout, but at a low price point, and the two scans that can be combined for it is price extreme low and reversing and breakout together. In Q Global, you may run them in a waterfall model. So I thought this is an interesting stock, very strong fundamental, and I took a long position. And as you can see, I am quite confident to share my trades before knowing the result, because I am not trying to show every trade is making profit. I'm just trying to show a disciplined way of trading, buying at lower price points, swing low or pendulum low, and shorting at higher price point, pendulum high or swing high. So this I thought is interesting. Let me share another couple of pretty interesting, I think, stocks. EBS. Now let's go back to Finder. In daily, Finder is very bullish, isn't it? Immediately you could look for buy setup. So let's go to the bullish signals. We have a large number of stocks that went up by very high percentage. That's why I mentioned the market ETFs are not enough to decide whether you are going to buy, I'm going to buy or not. We need to look at industry's fundamentals. Now, these are big percentage changes. I'm going to look at trade setups. So these are ready-made trade setups. I don't have to think much. These are the trade setups. Which one comes to the top? Emergent Biosol. What is the first column showing? Let's look at them. Emergent Biosol at price extreme low, sweet point to buy, went up with bullish pressure, touched trendline support, bounced up from trendline support, has a bullish headwind, has a possible box setup, has a bullish reversal, went up by almost 9.8%. That is the Q signals. If I look at the momentum signals, it has a big up move. It has a bullish kahuna. It has a mobile breakout. It has a PSAR reversal bullish. It has a green candle low. What else do you need to decide to buy a stock at a low price? Once again, it's a candidate that we could find with a few clicks, and then we could look at its fundamentals using Q Vital EBS. Very strong valuation, nice earnings quality, short squeeze potential. Earnings growth is not so high, that's fine. That's why the stock is at a low price level, undervalued with short squeeze potential. Now, this is a biotech stock. Biotech stock. So it's okay to buy the stock even if the industry is not strong. If you see the change over prior several days, all are up. Earnings 3rd November. The industry may not be strong, but that's okay. Let's check the industry using QA. That's okay in my view because it's a biotech. Biotechs can go up on its own strength. Yes, industry is not strong in relative score on Friday, but if you look at the percentage change on Friday for the industry, it is actually up. So that allows us to buy, and it does have acceleration over 5-day today. So industry has that doesn't tell us not to buy, and in any case for biotechs we are allowed to buy even if industry is weak. And now let's go back to the technical. How beautiful. A trend line support that is coming from far away in weekly. Remember how for CMCSA we could use this weekly trend line to book profit in a short trade precisely, and now we see a very nice reversal from weekly trend line support with bull release signal with a bullish shape candle. In the daily it has a bullish headwind, bull release, bullish flow, bullish pressure, bull release again, and a reversal candle at price extreme high. Sorry, not high, of course, it's price extreme low. Biggest up move of 3 months. Mobo breakout with a kahuna. PSAR reversal, very high volume. So this is looking like the perfect time to buy a price at long-term support, fundamentally strong, undervalued with short squeeze potential, and I did take a long position in EBS on Friday. More stocks to come. QMCO. Not as good as EBS because it has a bullish flow, but I don't like the upper tail in the Friday's candle on the Fridays. If it closed with a more bullish shape candle, I would be very happy to buy the stock. It also had a possible going for long setup, though it is still in an uptrend, so not true. But it has a bullish flow, it has a breakout, and weekly has two bullish headwinds and price is stopping at that watermark level with multiple long lower tail candles. Now the backdrop has changed to bullish color. We have a bull release signal as well. In the alternate momentum signals, we have biggest up move of 1 month, Mobo breakout with a kahuna, and we see the jump reached extreme low point. So time is due, overdue you may say, for a move up, at least for a profitable long trade. If the candle didn't have an upper tail, I would be happy to buy it at the close, and I have taken an exploratory position, but I am not as happy with QMCO technical setup as I was with EBS. But again, go back to QMCO, let's check its fundamentals. Valuation not good, but high earnings growth, reasonable revenue growth that allows us to buy, short squeeze potential at a low price level, that is also attractive. And here the industry is very strong, unlike biotech, which is okay, we can buy biotechs without industry strength, but here the technology, hardware, storage peripheral very strong yesterday. That's what I mentioned when I said some industries are looking very bullish. Let's look at its relative score. 93% of peer stocks went up, so in itself the industry was very, 93% is very high. And see the industry's relative score, it was weak earlier and now it is improving with acceleration. So that may be a sweet point to buy stocks at a low price point. So I have taken a position in QMCO also, but not so happy as with EBS. Now few more stocks to share. How much time I can take? I have 4 stocks. Okay, let me go through them. GAN, watermark support in weekly, long-term support with multiple long lower tail candles, including this week's candle. Bearish color but bullish shape. This level seems to be providing support. In the daily, you can see this triple bottom or reverse head and shoulder. Then an indecision at the bottom on Thursday with bullish shape candle. Friday breakout from trendline resistance with bullish flow. If we look at fundamentals, and now these stocks I'm sharing, I don't have a position in them, but I'm keeping an eye on them. GAN, valuation not good but has earnings growth with a short squeeze potential. Casinos and gaming. Let's look at its industry. I think the industry was showing strength on Friday. Yes, excellent industry. So I'll be very happy to buy in this industry on Friday. Let's go back to GAN. 92% of peer stocks went up, relative score very bullish. So that's a time to look for buying stocks at a low price level. So GAN is a stock I'm keeping an eye on. I didn't buy it. But let's look at another peer stocks when I came to casinos and gaming. A peer stock, Las Vegas Sands, LVS. Here the valuation is better than GAN. High earnings growth, very high revenue growth. We can see that from here also. Year over year, quarterly earnings revenues growth rapidly going up. Same industry. So industry is strong. Let's look at LVS chart. And when you see multiple stocks in same industry are giving bullish setup, you are more confident to buy in that industry. Again, this watermark support is providing support, long lower tail candles, bullish backdrop. In fact, at this price level, this is the first bullish backdrop after this drop. Bullish headwind. 1 week earlier, indecision at the bottom. Daily bullish headwind. Very nice move up from the bullish headwind. Retest of that level, false downside breakout. and now upside breakout with bullish flow. Alternate signal, extreme low jump thrust. So time for price to move up was overdue, and in fact at this level the bullish headwind perfectly allowed us to take a long trade when the jump and thrust were extremely oversold. Now a bullish flow again with biggest up move of 1 month with MOBO breakout. In fact, I took a long position in LVS on Friday. Three more stock. CLSK. Bullish backdrop at a very low price level. Trendline support in daily. Bullish headwind and now a bullish flow. However, it has a trendline resistance. So I'll be happy to see that it breaks out of the resistance to take a long position, or if it comes to the trend line support, either break out from resistance or comes to the support and goes up, then buy at the support. Both of them will be valid approach. Weekly is looking like turning up. We have bullish headwind, we have volume picking up, and if we see its fundamentals, CLSK, medium valuation, great earnings growth, great revenue growth, short squeeze potential, application software industry. Let's check the industry relative score. Relatively not very strong, however, it is showing acceleration. And if you see the percentage change, in fact, it is up on 1 day, on Friday and 2 day period. So industry allows us to buy. We look at relative score. We also look at the industry percentage because it may be up, not the strongest of the industries on Friday, but it is still up by a significant percentage. 1.75 allows us to buy. Okay, it is not retrieving the PRs. Sometimes if that happens, Refinitiv didn't send us all the data, so pause and play again. I'll come back to CLSK fundamentals. Okay, now it has retrieved. You see, if Refinitiv doesn't send a response, pause and play again, it will send the data. And this is what I wanted to show. Though relative score was not very strong, that's fine. The industry was up significantly. And see the percentage of stocks, PR stocks that went up. 89. That is very high. That is good enough reason to buy, and it has earnings growth, revenue growth. So CLSK is one stock you may keep an eye on to see if it is either breaking out from trendline resistance or reversing from trendline support. Two more stocks. MLCO. Bullish headwind in weekly, bullish shape, bullish pressure, bullish U-turn in all in weekly. In daily, indecision at the bottom, multiple, creation of watermark, testing of the watermark, very minute, false downside breakout, and now a decisive clear breakout from trendline resistance with bullish flow. In daily, extremely oversold condition shown by jump and thrust both. I am looking to take a long trade in MLCO provided its fundamentals are strong. Let's check that out. MLCO. Casinos and gaming. We saw already the industry is strong. I have a position in Las Vegas Sands, and I'm keeping an eye on another stock, GAN, and also MLCO. High earnings growth, high revenue growth allows us to buy, short squeeze potential, and very nice breakout in the charts. And you see, when you find three attractive stocks in the same industry at low price point, in fact pendulum low, and jump thrust are extreme low, they are I think some of the best buying opportunities at a low risk point. And one last stock, CRDF, biotech stock, oncology stock, Cardiff Oncology, at least the name says so. The weekly has a trendline resistance, but that may be far enough. As we can see in the daily chart, it had a base, and notice the bullish headwind at the very bottom. Price went up, created a higher low, bullish flow, that was a go with flow long setup. So this would be the first buy point after this long downtrend, with a go with flow long setup. So if you miss the headwind long, that's fine. If the uptrend continues, it would have given, as it did in this case, a go with flow long setup. That was the best time to buy. That trade had hit profit target, then it made a pullback. Market was in turmoil in this area, but it didn't drop much. Stopped at the yellow line, and on Friday it went up. In fact, it gave a bullish flow plus a go with flow long setup and a breakout setup. In alternate momentum chart, it had hit the extreme oversold condition in jump thrust, and now on Friday it has biggest up move of 1 month, and this is beautiful. Pocket pivot, Mobo breakout from a squeeze with a kahuna. And Dr. Jeffrey always likes to take this setup, pocket pivot. I mean, it is one of his setups that he explains. He has other techniques, many. So I don't know which one he prefers the most, but I have gotten used to taking these trades. Pocket pivot, Mobo breakout from a squeeze with a kahuna, biggest up move of 1 month. Bullish flow, bullish Q breakout, go with flow long setup, bullish backdrop. I am looking to take a long position in CRDF also. And if I check its fundamentals, it's a biotech stock, so industry strength is not required. Medium valuation, short squeeze potential, high earnings growth, high revenue growth. So that allows us to buy. It's a biotech, so I'm allowed to buy even if the industry is not strong. And if you look up the stock in Finder from Vital, okay, no, sorry, I came to, okay, let's check the seasonality. If I by mistake click the seasonality link, let's check the seasonality for October, though it's not required, certainly not required for biotech. October seasonality neutral, anyway, that was not required. Let's check these stocks Finder signals, and that will show you could easily find them from Finder. Firstly, price extreme low, that is always an attractive buy point for me. Gap up open, and you see I missed the gap up open when I looked at the chart. So it is useful to study the stock using Finder or Sonar, so we read all the useful signals. So it has a gap up move on Friday, breakout, and a go with flow, two trade setups, up by 8.7%. And if I look at the alternate momentum signals, HSA like signals, one big move, kahuna, pocket pivot, Mobo breakout from a squeeze with a kahuna. So many signals that we could read from the chart from Finder or Sonar. So I am keeping an eye on CRDF. I went through some of the stocks I traded earlier, shared publicly, how I managed them, exited them. Some I am holding. Will you allow me time to share one more stock? I think that is worth it. Skywest. And in fact, I took this example during master class of Friday. Let's check out Skywest fundamentals. I shared it in the public forum earlier, and it will be worthwhile to revisit the stock. It went up since I first shared it. You may look up the forum post. Great valuation, great earnings growth, great revenue growth, short squeeze potential. Year on year, quarterly earnings growth, revenue growth, fantastic. So crown jewel, 100% of the airline stocks went up yesterday. And I mentioned that in Friday's masterclass. If I see the relative strength of airlines industry on Friday, fantastic. 145 or 147 industries. Anyway, the color is enough. Very strong industry. Now, remember when I first shared the stock in the forum on this day? That was a go through long, pullback long setup. That was the first go through trend following long setup after this downtrend, after creating a base here. Beautifully captured the trade and it went up. You remember I traded with put, short naked put, and then I changed it to on this day with long stock because it was looking bullish, and I mentioned when it had a bearish shape candle, very next day using real-time chart I booked entire position profit. And in earlier webinar I mentioned fundamentals are strong, so if it gives a buy setup I'll be happy to buy again. In fact, Friday I entered the position again. I would be happier if it came to the trend line support that would allow me to buy at a lower price, but it didn't. And you saw 100% of airline stocks went up yesterday, and I took a long position again. And this is what almost always you will be able to do, or at least let me be careful. 70% plus cases you will be able to book profit at a higher price level, re-enter it at a lower price level. That is what I did. I didn't hold on to the trade after I saw the bearish shape candle with indecision at the top, bearish signal at watermark resistance. I booked profit and then I re-entered at a lower price point. It would be also okay to close partial position and re-enter that position again, partial position again, but in this case, as I mentioned in earlier webinar, I did exit the full position because the market was looking weak, and on Friday the industry was very strong. This stock was fundamentally strong, so I took the long position again. Let me see if it goes to the next trend line resistance in weekly. That is far away, and you could buy or hold also, not only Skywest but other stocks. So different traders have different approaches. I tend to book at least partial profit, and then as you can see, if the fundamentals are strong, industry is strong, I don't mind re-entering again as I did in Skywest on Friday. Well, that's a lot of stocks discussed today. I took half an hour extra, but I think it was worth it. Worth more because you see market is turbulent, up down, volatility is increasing, but using the Q signals, the 360 degrees holistic approach, I am quite confident in buying lower price levels, shorting higher price levels, and overall, as all these live examples show, they are working out quite well for me. You have to see, of course, if it is working out for you, and the Q diary will be very helpful. If it is not working out for you, the diary will show you what is different, because I am sharing my ideas regularly. They are working out. If it is not working out for you, there may be some fine tuning needed, and you will know it yourself if you log the trades on diary. I do log my trades in diary regularly, so I have an idea what I am doing correctly, what I need fine tuning. You may use the diary if you are not confident or comfortable or certain about your technique yet. That's enough for today's webinar. Thanks a lot for attending. I look forward to seeing you in my next webinar. Have a great weekend. And as these examples show, live examples, absolutely there is no reason not to make some profit from trading. Trade profitably. Thank you.